Hey traders, Raghee here. We've seen the aftermath of today's FOMC meeting and press conference. We've talked in the past few sessions about how to measure expectations. There were no expectations for a rate hike. Regardless of the chatter about the market, there is a really easy way to measure. Check out the previous videos where I talked about the FOMC countdown and the Fed Fund futures. I explained how to track that particular macroeconomic event with the Fed Fund futures data. All right, so we knew there was very likely no hike, initial move higher, and then we sold off. Well, the market that I'm most interested in is gold. Big move in gold. Now, what does that mean, big move? We always want to measure the market with historical volatility. I'm going to show you how I do it. This right here is the gold price movement range by day of week, meaning, well, you can see here, Sunday, Monday, Tuesday. Well, here's our Wednesday. And the typical movement somewhere between 26 to about, as you can see here, right about just below 20, and with an average of about 23. So we know an average is about 23 points. The lower range is 19, the upper is 26. Okay, so what kind of range did we get on gold today? All right, let's open up this daily time frame. This sell-off, the bulk of it was triggered by the FOMC, so we know the catalyst. Today's entire move was a 36-point move. This is a 10-point higher than the upper end of the historical volatility. This actually means we want to wait for either a minor low or an inside day. In other words, a squat-bodied candle could look like that, just below today's low, but very narrow in the range. Or what I'd like to even see would be perhaps an inside candle, preferably below the halfway mark of today's candle, and just not a higher high, of course, but more importantly, not a lower low. So an inside candle. If we get one of those two, what I call paused candles, then we can start setting up a long position in gold. Now, why do I want to be long? Well, the number one thing is the trend that preceded the pullback and the bulk of the most recent price action that we have seen has been mostly bullish. You can see the green grab candles in here. All right. Today was a significant move lower within the context of chop. You can see here bullish momentum, right, from this label. However, neutral trend, really important. Bullish momentum, neutral trend. So when this market pulls back to, and I love this in chop, look at the most recent high to low move, nice rally here, and find the 50%, find the halfway mark of that move. And that lands us right at about 18, 17 and a half. Look how darn near perfectly we tagged that level. In fact, I actually can, let's see, I'll show you how I draw this so you can see it. So grab the Fibonacci tool on your platform, start the Fibonacci pull from the lower end of the range, and then pull it to the high, just like that. And there you go, an area right in here. So I'm looking for this right around 1817, 1818. There's our low right in here. Excellent. I need that pause candle tomorrow. And it's at this level that I want to be a buyer in gold. Now, this is a more aggressive way to treat chop. If we were able to get back down, trade back down to the support near about 1780, 1781, that would be an easy oversold buy. Likely we'd see the stochastic trigger off terrific. All right. This is an overbought resistance area. So we do know we have overbought resistance as opposed to oversold support. And so this pullback becomes the first opportunity. Do not back the truck up here, please. If whatever your budget is for MGC, for GC, or I would actually recommend at this part of the trade, GLD, keep the futures for the lower part of the range. It's lower risk. You're right near the point of validity. That's supposed to be a POV. You're right near the point of validity. In this area, GLD makes sense. Okay, how do you want to trade the GLD in this situation? Again, whatever your budget is for this trade, use at most half, right? Maybe even a third or a quarter would be fine. At most half. So you're going to take a look at GLD, and then I'm going to look at the 18 March, right? 18 March expiration. That gives us 51 days to expiration, or 50 as of tomorrow. And then I want to find where the at the money or slightly in the money strike would be. That would put us at about 169, 170. All right. 169 would be in the money. 170 is by a smidge out of the money, but 169 or 170 would be the way to go. There's a lot of liquidity at 170. There's decent liquidity at 169. That's the way we want to enter tomorrow if we get that pause candle. So that's the plan for gold. That agro trigger trading chop at the halfway mark. Check it out. If you've never done this kind of trade before, do a quick paper trade. Jot down what the bid ask is, kind of mock out what your entry would be, and get a feel for what we're looking for, which is simply a return to about this area here, which is right around 1848, 1849. We'll step out in front of size at 1850. And by the way, this is the kind of stuff we do in the futures room. These are the kind of trades that I put on in the Sector Secrets Mastery. So if this kind of trading interests you, come check us out, either in the futures room where we would focus on the GC, or in the Mastery where we would focus on the calls in GLD. But they're all the same trade. You get to choose your own adventure with the asset class, ETF, option, or futures contract. There's even a micro, of course, in gold. All right. So check us out if this is something you think, I want to dig deeper into these kind of setups. In the meanwhile, if this trade helped you, if this idea helped you, smash that like button for me. Leave a question if it's something that's still kind of confusing. I check these every single evening. In the meanwhile, I'll see y'all in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.